Hey guys, it's Ryan with Big Dog Investing. Thank you guys for tuning into my channel. If you guys could do a couple of things for me, if you guys can go ahead and like, comment, subscribe to my channel if you guys have not done so already. Click the bell notification down below so YouTube can send you guys notifications whenever I release videos. Watch my videos all the way to the end. And if you guys could, share my videos and share my channel with anyone. I'm trying to grow my channel as much as I can, and I definitely need your guys' help in doing so. Getting started today is going to be Thursday, February 9th. Make sure you guys tune in all the way to the end of the video. We have a lot of information that just came out with the Kraken settlement with the SEC about crypto staking, and how this can impact the rest of the crypto space in the near term. Um, in my opinion, this was a huge hiccup. I don't see this as an end all. Again, no financial advice, but I still see an upside with cryptocurrency. Um, and I do see regulations hopefully coming out of this. Obviously, regulations haven't been put in, and we're going to get into that. So this is going to be a shorter video. We're going to get into a bunch of these influential people in the crypto space, get their takes, and then move forward from there. But getting started, the total market cap for all cryptocurrencies is $1,012,000,000,000. This is a 3.97% decrease. So just about a 4% decrease for crypto. Bitcoin right now is currently trading at $21,835. Ethereum is trading at $1,545. And XRP is trading at 38.39 cents. In my opinion, XRP was not really as affected as the rest of the crypto space with this news. Right now, Bitcoin is down 3.53%, Ethereum is down 5.16%, and XRP is down 2.30%. Um, as the rest of the crypto market was tanking with this news about crypto staking, XRP was kind of actually going up in price action before ultimately it did start to, fall with the market along with almost every other cryptocurrency. There's a few anomalies, but XRP was holding its dominance for a while and was not impacted as much as the rest of the crypto space. So that was great news. I do see, as long as we can stay above this $1 trillion market cap by the end of the week on Sunday, I do see still an upside in cryptocurrency in the near term. If we do fall short of that $1 trillion market cap, I do see about an 850 to a $900 billion market cap for the end of the month. This was just a huge hiccup. Getting into our crypto bubbles, the majority of all coins, except I talk about some cryptocurrencies, like, and I highlighted Rocket Pool in a couple of other videos. How when the rest of the crypto market goes down, it's up. So it's the biggest gainer on the day, up 8%. HBAR's up 2.6%, and NEO's up 1.5%. But the rest of the crypto space is down. Our biggest losers on the day, AXS is down 11.7%. GRT is down 15.7%. And, you guys have to do your guys' own research. If you guys see a coin that's down, like GRT, that's down 15.9%, you got to look at how, what was the price increase in the last month, and then decide, is this a coin that I want to get into? Again, no financial advice, but you guys need to make your guys' own decisions. And this is a great way. If a coin's up, 40%, in a day, it's probably not a great time to get into that coin. You might want to wait till it starts to drop a little bit, then buy in when it's lower, and then ride the wave back up. And I know we're in a red day today, but getting into the end of the month for our crypto bubbles, in the last month, AGIX is up 366%, APT 131%, GRT 102%. So it's still a down day, but overall we're still in a green month. And we could go into a red month. It's all up in the air right now with the crypto space, with the lack of regulations. Getting into our Watcher Guru news, Canadian University Dubai is now accepting crypto payments via Binance Pay. So this is great news that now college universities are finally accepting cryptocurrency. There's a couple colleges now that are actually offering Binance, or not Binance, they're offering Bitcoin classes, and hopefully they figure it out and get into like an actual cryptocurrency class and not just focus strictly on Bitcoin. But in the near term, this is just great news. Tether, USDT entity Tether profited 700 million in quarter four of 2022. U.S. banking giant BNY Mellon says cryptocurrency is here to stay. And in my opinion, this is great. Having a nice bank come out and finally, agreeing that cryptocurrency is probably going to be here to stay. Even though a lot of banks don't like it, and we'll talk about why banks don't like it and possibly why. you know, they're trying to get these regulators to not come out with regulations because it was going to take away from their profits. Robinhood lost 57 million after a glitch let users short a stock. These are just technical glitches, and I talk about how much I don't like Robinhood yesterday and in previous videos is why I don't own any stocks anymore is because of Robinhood. But now a glitch, they just lost a bunch of money. Let's figure out if they, somehow come up with a way to say, oh yeah, that was a glitch. We shouldn't have let you guys do that. Sorry, and take the money back. We'll see if they end up doing that. This is the big thing that we're going to talk about. Crypto exchange Kraken shuts down staking following SEC charges. We'll talk about that in a second. A New York regulator launches investigation into BUSD and USDP stablecoin issuer Paxos. And we'll talk about this probably in a different video. I want to highlight Kraken because this is the biggest thing that infected the price action of cryptocurrency today. Gary Gensler came out and says today the SEC charged Kraken for unregistered offer and sale of securities through its staking as a service program. Whether it's through staking as a service, lending, or other means, crypto intermediaries must provide the proper disclosures and safeguards required by our laws. This video is 3 minutes and 37 seconds. It's going to be the top link in the comments. You guys should watch this. This is just shows how crazy, this is. It says unregistered offer and sale of securities. And we'll talk about why this is just ridiculous because there's no regulations right now that, basically Kraken could have gone in, filed some paperwork and abided by what their securities laws is. So we'll talk about that. This guy right here, Dan Gamblerdo, came out and said, "What's most frustrating about the video Gary Gensler put out is somehow he makes a joke about stake like it's one big game. Crypto holders are looking for clear guidance, and his mockery remarks are doing the exact opposite, protecting anyone." So stake. He talks about stake is STAKE, not STEKE, which is the food. And this is just a joke. You're making a mockery right now out of your administration with the SEC. And obviously, you have not offered clear guidelines for cryptocurrency. Issuers, cryptocurrency companies, or even exchanges to operate in a free market. So this is a really bad look that he's cracking jokes at, our expense, us as the investors. It's a big slap in the face as you as an official. Um, Tony Edwards come out and says, think about it, folks. Gary Gensler and the SEC could have put out clear guidance on crypto staking and could have given U.S. exchanges a month to update their terms, but instead they use enforcement to cash grab $30 million and shut down the Kraken staking. So basically, they just got $30 million for free because Kraken now has to just pay them money to settle. And then part of that settlement says they're going to shut down all of their staking operations. For those of you guys that don't know what staking is you guys own a certain cryptocurrency, you give it to an exchange or you'd leave it on an exchange, and basically you receive rewards, APY, kind of like how a bank does. And this is just basically what staking is. You receive a percent of your coins. So some cryptocurrencies you might receive a 1% APY, some upwards of 20%. And that's great if you guys own a lot of cryptocurrency, or even if you own little amounts. It's better than investing or leaving your guys' money on a bank savings account where the savings rate is super low. Brad Garlinghouse comes out and says the list goes on with this. He talks about Brazil's new legislative framework. Note the communities. These regulators are providing leadership in doing the work that we are desperately missing in the United States. Unsurprisingly, this is where companies like Ripple are growing. So this is where it's great news, because Ripple right now is trying to operate as a company globally, not just in the United States. And right now they're operating as if like they already lost the lawsuit with the SEC. But in my opinion, I don't think that the lawsuit's over yet. He's just basically saying right now we can't really operate in the United States because there's not, there's no clear guidance or regulation in the United States. But this is where Ripple is growing because they are basically abiding by different countries' laws and making sure that their XRP token kind of just is able to function in every country, because that's what he wants to do. He wants to change the financial system using the XRP token. Warren Davidson comes out and says proof of work is greater than proof of stake is an understatement. Nevertheless, the SEC once again chose selective enforcement rather than regulatory action. Financial committee is now organized with a new digital asset subcommittee. Congress moves way too slowly, but change is coming. And this is what I agree with. There's the financial committee, and they came out with, a digital asset subcommittee of this. So they're going to talk about the crypto space, coming out and talking about how the SEC hasn't come up with clear guidance yet. And who's really at fault? Is it the federal government for not actually offering clear guidance, or is it the SEC who's ruling by enforcement? Jeremy Hogan, this is what I wanted to highlight, came out and said Kraken offers up to 20% stakes on tokens, and it's only select tokens, not every token. But Bank of America offers 0.0001% and a paperclip. Of course, the SEC would shut it down. And this is what I totally agree with. I think that banks right now are colluding with the SEC through emails, through text messages, through just having these secret behind closed door meetings. Because if Bank of America can offer such a low, basically APY, and exchanges like Kraken are giving 20%, why are people going to keep their money on in the bank, where banks would, basically the way how banks make their money is they invest your guys' money risk free, because if they ever lose it, the federal government will give them a bailout. So in my opinion, he hit it right on the dot. And then I also watched a video for BitBoy Crypto. He came out and talked about how he totally agrees that, basically banks don't want this to happen. Why would, they want somebody to give out, these percents that are astronomical in the financial markets? The federal government's the only one that actually gives out bonds, and that gives like a guarantee return on your guys' money. And with the bonds, if the interest rates that you're going to get back for your guys' money are greater than what the U.S. federal government can do, this is why the SEC came out and handled the things the way that they are with the staking with Kraken, and will go after other exchanges like Binance and Coinbase here in the near term. But they went after a really small one. Like Kraken has zero money, like compared to other exchanges. They could have hit Binance first because Binance has the biggest money, but they don't. And the reason why they don't is because Binance is going to put up a fight with this. Kraken's going to settle. And once they settle, then there's precedent now that, the SEC has in court. If they ever do take it to court, they can say, well, Kraken settled because they knew that they were in the wrong, and Binance would put up a fight right away. So what they do is they take out these smaller companies first and use these as precedent to go after the big companies. So I do see Coinbase going first as a big company, and then Binance would be the last one that they go after because Binance has the most money and the most power. The SEC announced a settlement with Kraken. Kraken agrees to stop offering staking as a service. Kraken will pay $30 million fine. None of the money will go to restitution because they aren't actually any victims. The SEC war on crypto is just getting started. This is good from Metal Lawman. I've talked about him a couple of times. I'm going to give him a follow because I've used him a couple of times. And I totally agree with this. Where's this $30 million fine going? Obviously, it's not going to the people, because the people weren't actually hurt with this unregistered securities offering, and it's so-called unregistered. So it's basically that $30 million is going to go to line the SEC's pocketbooks. Library comes out and says that, like, if you guys don't know, Library's been in a court case with the SEC. They lost by a judge. They're appealing right now. But Library comes out today and says, one time the SEC demanded every version of our website, refused to access GitHub repo, and we had to regenerate and print out copies of the website at periodic intervals. So basically, what the SEC does is they basically make your life a living hell as a defendant. They come out and accuse you of something, and then now you have to defend yourself and basically abide by everything that they say. Like the SEC could have easily gone on to GitHub and basically, use that as a backtrack and said, okay, on this date, this is what Library's website looked like. Back 2 years prior, this is what Library's website looked like. And they're like, no, we're going to make you guys regenerate your guys' websites, print out copies, and you guys have to do it by this date and this date and this date. And it's just, these loopholes that these people have to jump through after they get sued by the SEC is just ridiculous. Brian Armstrong, he's the CEO of Coinbase. It says, "We will keep fighting for economic freedom, our mission at Coinbase. Some days being the most trusted brand in crypto means protecting our customers from government overreach." So hopefully he totally agrees with this and doesn't settle like crypto if they do get into a accusation where the SEC comes out and says that, they are offering unregistered securities through staking, because you can stake on Coinbase. John Deaton comes out and says good corporate actors are now paying the price for FTX officials and Sam Bankman fraud. Another sad day for my country. And I totally agree with this. This is what he replied to, because he came out and used this and replied to this guy, Jesse Powell. So what Jesse Powell says is bigger balance sheets wouldn't hurt either. They picked the bottom of a bear market, waited for us to do a 30% layoff. They had all of our financials, lots of leverage. Maybe we looked weak. This is more about the FTX than it is us or staking, but the timing was not great. Potential fines obscene. And I totally agree with this. They're basically using this and just destroying the crypto space and using the FTX downfall to their advantage of why that they need to protect the average investor. But obviously they're not doing that. DS comes out and says, "Holy shit!" According to John Deaton, the SEC Commissioner Hester Pierce has acknowledged that her colleagues at the SEC were misleading with regard to the Howey test for XRP. We'll talk about this in a later video. I'm not gonna, bring it out, but DS ended up coming out with this, so you guys can. I'm gonna post this. Tweet in the comments so you guys can click on this link right here and read this. It's a really good read, and I totally agree with it. Zach Rector came out and kind of made a funny joke about this. So he says bear market hitting different from the shills for this recession confessions page. So a lot of people post some things about the recession, how they're being impacted, and I thought that this was kind of funny. It says my wife became a crypto and NFT influencer on FinTwit in 2021. Her account blew up and she made over $250,000 in 1 year of shilling NFTs and altcoins. We moved into a $750 house and I quit my job. In 2022, she made $35,000 off of Twitter and had to start an OnlyFans, and now we are broke. And I just thought that was kind of funny that Zach Rector ended up posting about this, because we have to make jokes about this sometimes. We have to realize that it's not all bad. We have to look at the positive in things. We're here today. We have to be grateful. God bless us. God bless our health. But we got to make jokes sometimes in the worst times to get through the days. James K. Filan came out and posted this. We got to look at what Stuart Alderada came out with, and he says today, U.S. crypto related doom scrolling aside, here are some positive updates for where we are at in the world. And this is what he commented on, because Brad Garlinghouse came out and says, stepping back for a moment from what's happening in the U.S. Just in the last few weeks, the number of positive, or at least headed in the right directions, clarity with global regulation development is energizing. Continuing its history of being tech forward, Dubai just published an extensive new set of tech algorithmic rule books for crypto markets participants, covering compliance standards, advertising, issuance, and much more. Australia's Treasury is looking to reform licensing and custody for the crypto and bolster consumer protection. They recently published a token mapping consultation and are looking for the public input before updating existing frameworks. And that's really good. Looking for the public input before updating existing frameworks. This is something that the SEC needs to do. The UK HMT's new consultation reflects the government's intent to establish a proportionate, clear framework that allows firms to innovate while maintaining financial stability, and opt for the UK to become the crypto hub, as is previously announced its goal was to be. South Korea's Financial Service Commissions published guidelines that deadline what would be considered a security token versus a payment token, and how those are separated, governed. The list goes on. I mean, this is what we highlighted earlier with Brazil. And, in my opinion, this is all really good news with cryptocurrency. Everywhere outside the US, cryptocurrency is flourishing. But as of right now, this is something that we're not doing. I wanted to highlight this too. ODL partners are using XRP to leave their competition behind. So on-demand liquidity partners are using XRP to leave their competition behind. This is from Zach Rector. And this is where I think that, people get misconstrued. Eventually, there is going to be a shift where not everything follows Bitcoin, where I think XRP will start to dominate the market and will no longer follow price action of all other cryptocurrencies. As soon as the on-demand liquidity gets officially set up, it's already working right now, but what I mean set up is regulatory clarity throughout the global financial markets. XRP, in my opinion, again, no financial advice, will be number one for total market cap. Getting into our last bit of news, this highlights, the crazy, disagreements that's happening in the SEC. So it says Hester Pierce statement on the Kraken settlement, and we're going to read this because I think that this highlights an important aspect of the SEC. So this is a statement for the Kraken down statement on SEC Payward Ventures. So this is Commissioner Hester Pierce. Today, the SEC shut down Kraken staking protocol and counted it as a win for investors. I disagree and therefore dissent. Kraken operated a service through which its customers could offer their tokens up for staking. The customers earned returns and the company earned a fee. The commission argues that this staking program should have been registered with the SEC as a securities offering. Whether one agrees with the analytics or not, the more fundamental question is whether the SEC's registration would have been possible. In the current climate, crypto-related offerings are not making it through the SEC's registration pipeline. An offering like the staking service at issue here raises a host of complicated questions, including whether the staking program as a whole would be considered registered or whether each token staking program would be separately registered, what the important disclosure would be, and what the accounting implications would be for Kraken. We have known about crypto staking programs for a long time, although it may not have been made a difference. I should have called for us to put out guidance on staking long before now. Instead of taking the path of thinking through staking programs and issuing guidance, we chose to speak through an enforcement action, perpetuating to make clear to the marketplace that staking as a service provides must register and provide full, fair, and truthful disclosure of investors' protection. And using enforcement actions to tell people what the law is an emerging industry is not an efficient or fair way of regulating. Moreover, staking services are not uniform, so one-off enforcement actions and cookie-cutter analysis does not cut it. Most concerning, though, is that our solution to a registration violation is to shut down entirely a program that has served people well. The program will no longer be available in the United States, and Kraken is enjoyed from ever or in so in Kraken is enjoined from ever offering a staking service in the United States, registered or not. A parasitical and lazy regulatory settles on a solution like the one in this settlement does not initiate a public process to develop a workplace registration process that provides valuable information to investors. Just shut it down. More transparency around crypto staking programs like Kraken's might well be a good thing. However, whether we need a uniform regulatory solution and if the regulatory solution is best provided by a registered that is hostile to crypto in the form of the enforcement action is less clear. And I completely agree with this. It's kind of crazy that, you have somebody who's a commissioner at the SEC disagreeing with Gary Gensler on their enforcement actions, ruling by enforcement rather than coming up with regulatory clarity. And that's the big thing that we need to highlight. Thank you guys for tuning in. If you guys can't invest with the big dogs, stay on the porch. Have a good one.